A lot of you guys have made a ton of profits with Alibaba's recent run up in the share price. However, some of you guys are now asking me, what is it going to take for you to sell your securities in Alibaba? And so that's what I'm going to talk about in this video here. And so as you guys smash that like button, let me run that intro. What's up, guys, and welcome back to the channel. Now, you guys have been asking me a very interesting question. Should I sell my securities in Alibaba and take some profit? And of course, the short answer to that question is I don't know. I can't give you advice or tell you what to do with your securities. And the reason why is because I don't take credit for you guys buying your securities at a lower share prices than where they are at today. I don't give you guys recommendations at all. This is not a recommendation channel. I'm never going to sell you picks or anything like that. All I do is I provide my research and I tell you what my opinion is on where I see the company's valuation, and I provide you guys with a ton of research and a ton of sort of like analysis of what other people are saying about the security. So once again, this is a research channel and not really sort of like a channel where you're going to get buy and sell advice. Now, the other thing is, because I don't take credit for when you guys purchase your securities, I absolutely cannot take credit for you guys making a ton of money on the security. That's on you. That's not on me. All I do is provide the research. You guys make the decision. However, if it comes down to what will it take for me, Moore Money or Tay Moore, to sell Alibaba, the first thing that I have to talk about with you guys is, what is my valuation? What does it actually reflect? And the way that I think about my valuation is that my valuation reflects what I see in terms of Alibaba's reasonable growth expectations for its free cash flow, less its stock-based compensation, discounted to today. What it does not give Alibaba credit for is all the wonders and magic that the management team is hired to build out. So, personally, I work on projects for the company that I work for where analysts may not necessarily give it credit for. However, over the years, we deliver on quite a bit of growth initiatives, and it gives analysts visibility to sort of like factor that into their valuations as well. And so over time, the value of the company continues to grow as we, one, deliver on growth expectations that we've laid out already, and two, we sort of deliver on new growth expectations and new growth initiatives as well. And so essentially what I'm trying to say is that when you invest in certain companies, you have to take a position on, do you feel that this company has the ability to grow its revenues beyond even what you're valuing in your model? And Alibaba is one of those companies. Now, I'll give you a company where I do not believe that they'll be able to grow beyond the way that I have them modeled, and that company is a great company. It's called H&R Block. I think that H&R Block will only grow in between that 3 to 6%. I do not think that management is going to go beyond that 3 to 6%. And so I grow revenue out at 4.5% into the next 5 years, and then I discount everything back, slap a multiple on it, a lower multiple, might I add, and that's the valuation of the company. And that's it. I do not expect them to move. However, a company like Alibaba, this is a spawner company. And so this is a very unique and exceptional type company that I do believe is going to be around for the next 100 years. And what they really do is they are a free cash flow generating monster, but then they reinvest a lot of that free cash flow into new businesses that can generate high levels of return. And so, you create these like insane sort of like large organizations that continue to grow out earnings. And so let's take a look at that quickly. And if you don't understand what I'm saying yet, you will by the end of this video. I'm going to do my best to explain this to you guys in a way that's easy to understand even for newcomers to investing. And so this is what I mean about Alibaba being a spawner. The company effectively just started off as an international wholesaler. People just went online, bought their products, and purchased them internationally. But then, the company spawned into new businesses. So then they created their China commerce segment. They created Taobao and Tmall. And of course, they actually purchased Sun Art. So part of being a spawner is that you can purchase other businesses and then grow them out as well, right? They also started Lazada, or actually they bought Lazada as well. So they purchased Lazada, and now they're growing this business out as well. They purchased Elle.me, they're growing that business out as well. They're also growing out the cloud business as well. And so the point that I'm making is that Alibaba is creating an ecosystem, and they started with one business alone. And so the point that I'm making here is that in the future, like right now, I'm giving them credit for growth in many of these segments. But what I'm not doing is in management's back pocket, they have other businesses that they're seeding that they do expect to eventually incorporate into here. One of them that they recently added was DingTalk. That wasn't, it was in like their new emerging businesses segment for a while. Now, then they included it into cloud. The other business that recently came about, and they haven't really talked about it if you go back 4 or 5 years, is Taobao Deals and Taocaicai. And so these are businesses that are experiencing rapid growth. And so the point that I'm making here is that Alibaba will continue to add these in. And so, you know, we take for granted how many businesses that they have, but like the fact that, you know, they have Trendyol, I believe that's in Turkey. They have Daraz in Pakistan, Lazada in Southeast Asia, AliExpress. I've actually used AliExpress, believe it or not. And this is, you know, basically Taobao, but international, I guess, right? You guys correct me if I'm wrong. And then in these segments, they're also innovating. Like, for example, I love the fact that you can have a contactless fast food purchasing experience with Fresh Hippo. This is blowing people's minds as it relates to McDonald's toying around with this, like the contactless purchasing for some of their restaurants. Well, if you go to China, Fresh Hippo has had this for a long time. And so, you know, they're going to continue to grow this stuff out. And so why do I say all of that? Well, I say it because even if Alibaba approaches my valuation of $250 per share, I probably wouldn't sell it. Like, I might take some profits, who knows, but I probably wouldn't sell the position. Actually, I know I won't sell the position as a whole, so long as I believe that the company is going to continue to operate like a spawner. I have more fresh capital coming into the portfolio at a large amount, and so I still have to try and deploy all that capital. I don't need more capital from selling my Alibaba positions. Look, at the end of this day, or at the end of the day, I believe that in 10 years, Alibaba is going to be worth considerably more than what I'm valuing it at right now, or the intrinsic value will be considerably more, not taking into account the adjustment for inflation, because you got to adjust for that, right? But the point that I'm making is that I believe in management's ability to execute, and this is one of those types of companies that will do that. Other companies that I do believe that will do that in the future is, of course, Microsoft. And so this is why I keep going back and forth. Microsoft is trading under its intrinsic value, and it's trading for a relatively okay value, and I see so much future growth for them. I'll probably just end up buying the securities this year. I need to like stop being so dragging my feet on that name. Another name is Alphabet. I think that they're going to be a wonderful spawner into the future. Another name is Amazon. You see Amazon going into so many things. They revolutionized the online purchasing business. They also simultaneously revolutionized the cloud computing business. How many businesses have revolutionized two industries at the same time? It's absolutely nuts. And you know, so on and so forth. Another company in China that is also a spawner, and probably a better spawner than Alibaba, especially in the digital space. You guys know the name already. It's Tencent. And so, you know, there's all these types of unique businesses. I also think Berkshire Hathaway is another spawner. They do it mostly through acquisition, but once they acquire the companies, you know, the companies already have exceptional management, and management know how to grow these businesses out as well. And so I just gave you a list of quite a few spawners, and I gave you an example of one, H&R Block, which I don't think is a spawner. I mean, you could argue that's a mini spawner, but not really at all. And I'm going to hammer that point home a little bit more. And so my valuation today is $230 per share, which reflects where the company is today. And so effectively what I'm doing is that I'm providing growth for some areas of visible and predictable growth factored into this model. And so the point is that great management has to develop or innovate the business and give the shareholders more to look forward to. And so effectively what I'm saying right now is today, I believe that everything that's built in and all the guidance that we've been provided, I believe the company grows its revenues out at 8% into the medium term, right? Now, Goldman Sachs just came out and they're saying low double digits. So they already believe more in the company than I do. And, you know, as the share price continues to rip, I absolutely guarantee you there's going to be people coming out with insane models that they're going to say, hey, you know, the overall revenue today, we can see visibility into 20% a year growth. You're already seeing people do that with Tesla's model valuations that they have, where they're factoring in 50% growth, right? Like, how else is Cathie Cathie Wood getting $1,000 per share valuations for that company, right? Whereas I'm getting a $70 per share valuation. It's very clear that she's providing them more credit than at least I think they deserve, but it is what it is. The valuation is an opinion based on the person who's doing the valuation. That's all it is. And so what I did to help you guys a little bit more is I sat down and thought about realistic areas where Alibaba can develop the business and increase its valuation. And you guys probably saw this picture on the thumbnail. Now, I want to explain this picture a little bit more here because this is a very relevant picture. You know, Alibaba, their base business, is obviously growing out and sprouting these new businesses, and new businesses are sprouting all the time. And you can consider some of these branches like growth, right? Like they'll have a business that's only here, and then of course it grows out, that branch grows out, and then that particular business line might create new businesses. Like for example, China Commerce now has sprouted out, and it has you know, in addition to Taobao and Tmall, they now have Taocaicai, they now have Taobao Deals, they have Fresh Hippo, they have Sun Art. They're integrating all of those businesses together. They're also, you know, some branches join together. This is another good analogy because you have Taocaicai and Taobao Deals joining with their logistics business, and so you have like these linkages. So you have this whole ecosystem, and this whole thing I expect to grow out. So, you know, if you're very optimistic, you can absolutely value the company at $1,000 per share. In fact, in 2020 or 2021, when everybody was really excited about Alibaba, you saw people providing valuations for Alibaba at $500 to $1,000 per share. This is how they were doing it. They were giving them credit for areas that I don't see reasonably right now, but they were trying to, or I don't see a realistic reason to give them credit for that type of growth right now, because they themselves haven't even provided information on it. But you can see why this picture is a good analogy. I'll probably be using this picture a lot more. And so here are 5 areas I just thought of where Alibaba could increase its valuation. So the first one is Taobao Deals and Taocaicai continue their extreme levels of growth and push up the overall growth expectations for China Commerce above 7.5%. Because right now I'm forecasting China Commerce to grow at just 7.5%. And so Taobao Deals and Taocaicai, these are fast growing subsegments. Throw in huge growth from Fresh Hippo, throw in some huge growth from Sun Art, and, you know, throw in some amplified growth from Taobao Deals as well, and or just Taobao and Tmall as well, and you're easily going to be going past that 7.5% growth factor. Now, the other area is in their Southeast Asia segment that they're growing out. So Lazada begins to take massive market share in Southeast Asia from Sea Limited. So if Lazada starts leading that market, they are not leading that market right now, but if Lazada starts taking market share, and we predict that Lazada will continue to take market share, we'll have to increase our valuation for the international business, which Lazada is the lion's share of. And so this would increase the market value of Alibaba because this business is worth more. The third area where Alibaba could increase its valuation is cloud re-accelerates back to that 30% level. Now, China is expected to grow at 30% a year. And so when I brought my cloud valuation down to 15% growth, and then I even tapered that down, well, that is significantly lower than what the market pundits or, you know, the researchers are expecting the cloud market to grow at. And so this is not just a huge thing for Alibaba, but I think it's something that's not being even forecasted for Tencent as well. I think they're both being under forecasted on their cloud, and I'm purposely under forecasting them and being very overt about it. And I always like to say I'm a very conservative modeler, and you're seeing me do it right here in real time. So go into the Alibaba model, which you can get at that lower tier of the Patreon. Open up the or click into Alibaba, go down to the cloud section, and you'll see that I'm growing this at much lower than 30% a year, despite Alibaba even telling you in their investor day that the cloud business overall is expected to grow in China at a 30% or higher level. The fourth area where Alibaba can develop and increase its valuation is the big expansion of the Sun Art and Fresh Hippo locations. And so, you know, I kind of threw that in here, but, you know, it's better that I separate it out because this is more commerce related, like online, whereas this is more foot traffic type thing. You know, there's still people who prefer to go to the grocery stores and not purchase online. I'm one of them. And so, you know, I don't really purchase a lot of stuff online other than if I'm purchasing stuff on Amazon. But when it comes to groceries, I still go to the store. And I know fewer people go to the grocery stores in China, but there's still a lot of people that like to go to the grocery stores. So you expand the footprint and you take market share on the foot traffic level. And of course, that increases the overall valuation. Now, I hope that they break apart online grocery and online commerce from foot grocery and foot commerce. I'd love to see them break out total China commerce that way and give us a little bit more information on how to forecast these businesses out. But as of right now, they consolidate them. But with international commerce, this is all the other stuff. So not just Lazada, but this would be like Duraz and also their other international commerce businesses like their legacy business 1688, etc. And so, you know, Alibaba Express, I think it is. And so, you know, all of that. So if the growth in those areas remain elevated as well, then you could see the overall business become more valuable. Now, though, areas that I'm not including in this is new businesses that they could generate, you know, massive expansions for I don't even know. Like, to be honest, I don't even know what else they could do, right? Oh, yeah, you know what? Expansions in the valuation, the current valuation of the securities that they have on their balance sheet. That's another area where you can see increased valuation because it would increase the value of the excess capital. And, of course, the final area is probably like Ant Group, you know, us incorporating. I should have added that as a number 6, but Ant Group, like all of this stuff in Ant Group being finalized, we recognize that it's going to be 33% ownership, and we have some runway into forecasting out Ant Group's future growth. Right now, I'm not growing Ant Group out that much at all. I'm growing them at like 7.5%, but we all know Ant Group's growing at like 30%, right? And so we forecast that in. Well, that once again increases the valuation as well. So there's a lot of stuff that I'm not forecasting on purpose in Alibaba because in the valuation of Alibaba because I don't have a realistic runway for this growth. And so the question that you have to ask is, can you see a reasonable level of evidence that the company can continue to develop its lines of business in ways that you're not yet giving them credit for in your model? And if you can see that stuff, then that is evidence that that company is probably a spawner, and it's something that you should really give or pause to when it comes to the share price coming back to your intrinsic value, and really think about the fact that management probably has the ability to deliver exceptional results to you and help you think about ways to increase your valuation by providing factual evidence. And so I'm going to leave it there. If you missed my video where I discussed Alibaba now being placed as a number 1 pick for a couple of Wall Street banks, you can get to that video right here.